Hi guys, welcome to my channel. My name is Hugo, and today we're going to see what's going to be the best stocks for this week, where we're going to see two REITs and other two which are related to oil and gas. So we're starting the week with the ticker ARR, Armor Residential REITs. It's one of the highest dividend yield REITs that I have on my portfolio, with around 15.85%. They increased in the past week because they went down quite a lot. They were around 14 to 11% now. Since the market went so down, they are now 15%. Although this one is not quarterly paid, is monthly paid, but I decided to include on this this analysis. Beside the fact that we don't have too much information regarding the valuation, this based on the data that I found, they are undervalued. They are still undervalued. 0.73% is not much. They are almost at the fair price. They actually increased a bit in the past few months, as in the past month, as you can see in the graph. But although they are still undervalued, that's a good point. The ex-dividend date is going to be on the 13th of May, so you're going to have plenty of time to buy this one. But bear in mind that it requires at least 2 days, so they can process your order, and then you can receive your dividend. The financial health score is 5 of 6. It's one of the top stocks that we have during this week, which means that in terms of financial health they are quite good. The only score points they fail is on reducing debt, and they have around 7.4 billion in assets and around 7 billion in liabilities. In terms of the market sentiment, we have hold, but we have here a future growth of 118.4%, which is amazing. This is really good, and I don't see any stock at this point with so much growth. Although the past performance was minus 23.9%. So if you have this stock on your portfolio, that's great, because we're going to have a lot of margin to grow. Although they are still undervalued 0.73%, they are still, as well, you're buying at the fair price, you're not buying overvalued. And having consideration the future growth, this could be a good investment, although that's a bit risky because they are still undervalued. And for me, I prefer to buy stocks that are undervalued, like in 20% or more. In this case, since we have here a really good future growth, I think this is a good stock to have on our portfolio. And of course, they pay monthly, and they have a high dividend yield of 15.85%, which is one of the highest dividend yield payments that we have so far. The next ticker is going to be SBRA, Sabra Healthcare REIT. So this is another REIT that we have for this week, but this one on the health sector. They have a dividend yield of 8.06%. They pay quarterly February, May, August, and November. They are undervalued in 59.9%, which is quite interesting. And the ex-dividend date is going to be on the 15th of May. So we're going to have plenty of time to buy this one. In terms of financial health, we have 1 of 6. And this is one of the reasons why this healthcare pushed me a little bit back, and why I do think it's risky. Although we do have a really good future growth, and they are undervalued quite a lot. This is one of the things why I don't go for this stock, because in terms of assets they have around 180 million, and in terms of liabilities around minus 1.6 billion, which is quite a lot. And this is quite concerning for me. So I do think this is a medium-high risk because of the financial health of this company. But besides all other indicators, it seems to be good. In terms of the market sentiment, we have a buy in the future growth, as I already mentioned, 42.2, and the past performance minus 27.9. One thing that I forgot to mention in terms of financial health is in terms of the score, they fill in all. In short-term liabilities, long-term liabilities, debit level, debit coverage, and on interest coverage. So we do have here a quite problematic company, although it's a company that I think we should have and put on our watch list, and see if the financial health gets better in the next upcoming quarter. The next ticker is going to be ENB, Enbridge Inc. So now we are working on the energy sector with oil and gas transportation. They have a dividend yield of 5.91%. They pay quarterly February, May, August, and November. They are undervalued in 14.45%, which is good, not great, but is good. and the ex-dividend is going to be on May 12th, so we still have time to buy it if you want to buy this stock. In terms of financial health, we have a score of 2 of 6, so it means that they fail with short-term liabilities, long-term liabilities, debit level, and debit coverage. And in terms of assets, they have around 8.9 billion, and in terms of liabilities, around 18.2 billion, which is a lot of liabilities. So they have quite of risk. In terms of the market sentiment, we have a buy, and the future growth we have around 8.9%. It's good. It's the average. And in terms of the past performance was 22.6%. As you can see in the graph, this stock went up in the past month. All the energy sector went up due to the war that we have in Ukraine. So all the energy went up. So this is quite normal, and I think this future growth may change in the next upcoming months, or as soon they report in the next quarter. The next ticker that I have also in my portfolio is going to be BP.L, British Petroleum. It's one of the stocks that I have for a long time, since the beginning. They pay a dividend yield of 4%, but this is actually 4% that they pay you. You don't have tax because it's a British stock. They are in the London Stock Exchange, therefore you don't pay any tax. They pay quarterly, February, May, August, and November, and at the moment they are overvalued in 12.3%. This is also due to the oil crisis and the gas crisis that we are seeing here in Europe. And the ex-dividend is going to be on the 12th of May. You still have plenty of time to buy this one, although I think they are too much overvalued to buy now. The financial health has a score of 2 of 6, so they failed in reducing that. So, and in terms of assets, they have around 120 billion, and in terms of liabilities, 101 billion. So they are quite good in terms of financial health. In terms of the market sentiment, we have hold and future growth. We have a 3.9% of future growth. In terms of the past performance, we have a decrease of 33.5%. Although I think the stock is still too high, and since it's overvalued, if I didn't have this before, I won't go to buy now because they are overvalued, and for me it's a no-go. In terms of the last week market performance, all the markets went down. We don't have any market positive during the past week. We have a decrease for more than 2 weeks, and it's still continuing going down. Everything is on red, and being more affected is going to be the Chinese markets with a decrease of 2.10%. Unfortunately, this for me going to have impact on the one of the ETFs that I have, which is the MSCI, and on the stock Alibaba, which still continue to be negative with around minus 40%. I don't have intention to sell. I'm hoping they will increase in the next upcoming months or years, maybe. In terms of the last week sectors, the most impacted we have is the Nasdaq Biotechnology sector with a 3.55% of decrease. So meaning Pfizer and other companies that work in a biotechnology, they were quite affected, and we're going to see this in the next upcoming video, which I'll talk about the performance of the performance of my portfolio, and you see which stocks got more affected, and Pfizer was one of those. And in terms of the best performance of market during this week was still the energy, because of the war, and we're still having some issues with gas and oil in Europe. There are more sanctions to come up against Russia, but and this will going to impact more. So there's going to be still an increase on crude and oil for the next upcoming weeks, until the war continues. I think we won't see any end on this. Comparing this week with the previous one, in terms of the HeatMap, we now starting to see some greens. In the last week we had all reds. That was quite tremendous. We have the energy minerals with Sham and Chevron with a big increase. On the technologies sector, we see Microsoft with minus 1%, and Google had the increase of 1%. Apple still being impacted. The semiconductors still being impacted, although they have here a return from the previous week. We had increase around almost 11% on AMD, Qualcomm, Intel, and AVGO. The AVGO was I still have it, and Intel I still have it, but my stock in Intel is still continuing to be negative. And one of the biggest losers that we have here in the past week was Amazon with minus 7.65%. As I mentioned before, we have here Pfizer with minus 0.6%. So now let's have a look into the market for this week. So in terms of the SP500, we may see a fall of around minus 9.77%, turning down. As we can see, probably we're going to reach this support around here, around the $3,720. And we may see here as well, maybe not at the beginning of the week, because we are under sold here, and we're starting here to start to go up. So I do believe that Monday or so we may not have so big drop, because we are being undersold, but more towards the end of the week we may see another decrease for the respective 9%. Since we don't see any consolidation here, we may continue in a downtrend for the next week. In terms of the Bitcoin, we may continue follow the trend of the SP500. We may see a fall of around minus 15.25%. They are under pressure here. The consolidation is not being proved so far. The RSI lacks upward momentum. As we can see, we don't have another uptrend, but we still are being undersold. The price has been broken below the bullish channel, as we around the 50. So we are in the lower boundary now. Probably we may see again, as I mentioned on the SP500, an increase on the next Monday and Tuesday, but then it's going to have a downtrend until the end of the week. Okay guys, I hope you enjoyed the tips for this week. Don't forget to hit the subscribe button and the like. That will help me with the YouTube algorithm. And once again, thank you, cheers, and see you next week.